All right, hey, how's it going, everyone? So, super excited about this video. We're basically going to be doing a deep dive into UnitedHealthGroup. I know, the energy might suggest otherwise, but I really am excited about it. I just landed in Japan last night, super jet lagged. I spent some time in the States catching up with family. It was a pretty good time. But now I am back into the office and it's time to crank out and pump out YouTube videos again. UnitedHealthGroup, they've been on my watch list for quite some time. However, I unfortunately had to delete them in favor of CVS. So I bought into CVS during their massive sell-off about 6 months ago. And after a decent gain with CVS, I sold out of them and I'm kind of not interested in health insurance stocks for the time being. However, I saw the news, I saw what is happening. They're going on a massive sell-off, UnitedHealthGroup. So I'm trying to figure out, is it a good time or not to buy into UnitedHealthGroup? Now, as you can see on your screen right now, their total return, their stock market performance, at least what we can see on this stock chart right here, is 100,000%. So their DNA, they are a dividend compounder. There's no objections. Objectively, they are a dividend compounder. But as people say in the stock market, past performance is not indicative of future gains. So UnitedHealthGroup, who they are right now with all the turmoil and bad news that's surrounding this company, are they actually going to be a good investment or not? That's what I'm trying to figure out. And hopefully you don't mind if I turn off the camera because I look and feel rough right now. There's nothing more I want to do right now than to go take a nap and go sleep. Because I'll tell you this right now, going from Seattle to Japan, that's a 16-hour time zone difference. And it is absolutely kicking my butt. However, once I do catch up on my sleep, the upload schedule and frequency is going to go right back to normal. But without further ado, let's go ahead and get into it. Let's explore, talk about UnitedHealthGroup. And what you see on your screen right now is basically going to be the flow of the video. So first and foremost, let's talk about their business overview. How exactly does UnitedHealthGroup make money and what is their biggest growth driver going forward? So UnitedHealthGroup is a vertically integrated healthcare company, and they have two main business segments, health services and insurance. Now, health services is known as Optum. It's the healthcare arm of the business. So whatever and anything to do with treating the customers. This includes the physician groups, surgical centers, clinics, pharmacy benefit managers, and healthcare data analytics. Speaking of which, their healthcare IT solutions are used by 80% of the hospitals in the US. That means they have their hands in almost every single hospital in the US. 80% is a pretty big number. And then, of course, United Health Insurance, which is probably what you associate United Health with. And this includes the government-run programs such as Medicare and Medicaid alongside the commercial employer-sponsored insurance. And believe it or not, this is their bread and butter. And what's crazy is in the insurance space, UnitedHealth has the biggest market share out of all of the competition, and it drives about 2/3 of their total revenue. So that's the business model. But how do they make money? Well, from insurance premiums and out-of-pocket payments, plus the government funding their insurance plans. And then, of course, the customers paying for the treatments that they receive in their Optum network, whether it's the hospitals, the surgeons, or the patients themselves. And their biggest growth driver is the number of acquisitions they are making in growing Optum. This includes therapy, plastic surgery, primary care, and more. UnitedHealthGroup is trying to become a one-stop shop for the healthcare experience, much like CVS. And something that you want to keep in mind is that more Americans are living longer than ever before, which ultimately means more customers for Medicare Advantage, anyone above the age of 65, but it also means they'll have more customers from the moment they are born until age 85, 87, or whatever. Lifelong customers in the United Health ecosystem. So what's the argument against UnitedHealth? Well, number one is the public knowledge that UnitedHealth Group denies about 30% of all claims, insurance claims, which means their appeal and customer base, knowing that, dude, it's going to shrink. Because who the heck is going to want to sign up with a health insurance company that denies about a third of the care that you're going to potentially need in the future? Their brand image as of right now is absolutely shattered. And number two is a hostile government landscape, at least for the next 3 years. They're not going to say yes to budget increases as easily as they did in the past. So an unfriendly government is not going to be a bull case for UnitedHealth Group. And then number three, if they are found guilty of Medicare billing fraud, they're going to have to pay about $12 billion in fines. And we're going to talk more about this during their recent earnings call and when we review that. But with the negative out of the way, what is their economic moat or bull case? Well, number one, as we alluded to earlier, UnitedHealth Group is the biggest player and market share in the health insurance space with about 22% of the market. The next biggest dog is Cigna at 13%, and the numbers get smaller and smaller for the other competitors. And then number two is a subsection of the health insurance in that they are the Medicare Advantage leader. They have the biggest piece of the Medicare Advantage pie with 29% of all patients. And the next biggest player is Humana with 18%. And then number three, I think this is the most important one, is their reach and influence. As a vertically integrated healthcare company, they can basically determine their costs. Because not only are they carrying out the services and treatment, but they're also the ones insuring it. Furthermore, their extensive employer partnerships create a strong network effects and high switching costs. And even outside their commercial insurance plans, especially since their software and healthcare are dependent on one another, switching costs is a real thing. And I know this is just anecdotal experience, but at both of the Fortune 20 companies that I worked for, our employer-sponsored insurance plan was through United Healthcare. So all that to say, being number one in any industry, it does come with a lot of advantages. Their scale, the network effect, switching costs. UnitedHealth Group, I think their economic moat is looking pretty good. Now let's talk about their most recent earnings report, their Q1 of 2025 results. Their revenue was up by 9.8% year over year, and their operating margin was 8.3%. On the other hand, it was 7.9% for the same period in 2024. And after hearing those numbers, you might be bullish, but it did not meet the expectations of Wall Street. And what's worse is that they slashed their 2025 outlook and guidance. And the kicker is the CEO left the company, which has since been replaced. But nonetheless, if you lower the guidance for the year, you pull your forecast, dude, that's going to upset and make Wall Street very nervous and angry. And that's why their stock price has been absolutely demolished in the past 2 weeks. It's just bad news after bad news. And by the way, dude, I'm getting so sleepy. So I'm going to pause it right here to grab some green tea and then I'll come back.
12 seconds later.
So on the note of bad news, perfect time for me to talk about what else is going wrong with UnitedHealth Group right now. Whereas CVS and Humana reduced their enrollment numbers for Medicare Advantage, well, check this out. UnitedHealth Group decided to double down on Medicare Advantage for the past 2 to 3 years. And as of right now, dude, the margins are unfavorable because of high medical costs. And if you don't know or you're not too familiar with the health insurance landscape, Medicare is the health insurance that is reimbursed by the US government because it covers our elderly folks and disabled population. And as we learned in their bear case earlier, they were also caught red-handed by how they coded their customers' health conditions in their insurance part of the business. So with Medicare Advantage, what you have to know is that insurance companies receive more money from the government if you have customers that have serious conditions or if they're more sick. So UnitedHealth Group might categorize someone that has a minor issue or a health problem as someone that has a really major or a life-threatening condition. Do you see the logic behind that? They're exaggerating on the recorded conditions. UnitedHealth Group was able to receive billions of dollars more than they should have. So they're gonna get the hammer slammed on their nuts for committing fraud, which I think they are going to get in trouble. I don't think they're gonna be able to get a slap on the wrist. I think because the CEO left the company, I think they actually were committing fraud. And the current presidential administration is not a big fan of government money going towards public services, especially health insurance companies. As a matter of fact, Dr. Oz, the Medicare and Medicaid leader, he promised to do a crackdown and tighten the belt on Medicare funding. So the proof is in the pudding. They have a hostile government environment right now, and every unmanageable headwind is flying in the face of UnitedHealth Group. Yeah, things are not looking good, but it gets worse. Check this out. Because their health treatment and services arm of the business has been getting burdened with customers seeking out the care they need. Yeah, riddle me that. People actually utilizing their health insurance in order to receive the care that they need, and that's going to hurt their business model. And because of inflation, the medical costs and price to do business, yeah, it's squeezing UnitedHealth Group's margins. So even though their revenue might be going up, their bottom line and free cash flow is going to be negatively affected. That's why being both the provider and the insurer, it gets a little sticky, and we are seeing the flaw in that business model. Like in a perfect world, when they were crushing it, it seems like an amazing business model. But when the medical costs are going up, the government is not on your side, and more patients are seeking out treatments than you forecasted or anticipated, yeah, things are not going to be too good for you. So not only is UnitedHealth Group getting probed by the Department of Justice for fraud, but they're also being investigated for antitrust violations. Because remember, they're number one in market share across the board for almost anything and everything related to health insurance. So the next 180 days for this company, yeah, it's going to be rough, as the headlines surrounding them coming out of Wall Street and whistleblowers and journalists, it's going to be negative and litigation related. Do you really think something positive about UnitedHealth Group is going to be published in the next month or 2 months? No, dude. Ever since the assassination of one of their executive leaders, it's just been bad news after another for this company. So it makes a ton of sense as to why their stock price is selling off despite their strong fundamentals. Speaking of which, let's go ahead and take a look at their numbers. So the first thing that I like to look at when assessing and analyzing a company is their market cap. And as of right now, UnitedHealth Group, they lost a ton of their market cap in the past 2 to 3 weeks, but as it stands, it's $274 billion, which means this is a pretty big, large cap, blue chip company. And the reason why I like to look at their market cap is because I want to look at their price to sales ratio. And in order to do that, we need to take a look at their revenue. So their market cap is $274 billion, and their revenue is $410 billion. So this company prints money. And year over year, that's an increase of 8.06%. So they're growing their top line year over year at a rate of almost double digits. In 2020, their top line was, what does it say? $257 billion. So in a span of 5 years, we're going from 257 to $410 billion. And now we get to figure out, is this company overvalued, trading for a premium? Are they undervalued? Is the market feeling spooky about them? Because that's what the price to sales ratio tells us. When the revenue is a lot bigger than the market cap like this, I'm going to tell you right now, this is going to be less than a 1. If it's less than a 1, then it shows you that the company might be undervalued. And in the case of UnitedHealth Group, it's a 0.6. That is pretty bonkers, because usually it trades for a premium. Their price to sales ratio is usually like a 1.2 or a 1.4. But for it to be a 0.6, dude, that is really undervalued in my opinion. So think of it as the PE ratio being a 40, but now being down to a 15. And speaking of the PE, what is their forward trading multiple? Well, friends and family, that's going to be a 13. Yes, a 13. Now, historically, for the past 20 years, on average, their trading multiple, the PE ratio is usually a 22.9. So we're just going to go ahead and say 23. So right now, the PE is a 13. That is absolutely bonkers. And when we take a look at their earnings per share, now listen, I care about the EPS because it tells us the company is improving its net income per share, which means their profitability is improving. And their EPS as of right now is $24.07, which is an increase, it's not 101%, which is an increase of 53.9% year over year. Now, why did this number go up so much in the span of 12 months? Well, because in 2024, they had to do a lot of payouts for damages related to cyber attacks in their Optum line of business, and they improved their margins. However, their margins going forward, especially in 2025, is not going to be good. But for the most part, their bottom line, their money left over after paying for all of the operational expenses, it's looking pretty good. The next thing that we're going to assess is their debt situation. There's many different ways to do it. How I like to do it is by looking at their debt to EBITDA ratio. Now, in order to do that, we need to take a look at how much debt a company has. And as of right now, UnitedHealth has $76 billion of total debt, which, as I remind you, their revenue is $410 billion. So this number right here might sound like a lot, but when you put it into context, it doesn't sound too bad. And their EBITDA is going to be, $29 billion. So things are looking pretty good. It's not a million, but it's $1 billion. And when we do the ratio, it is in fact going to be a 2.6. Now, what you want to see is a debt to EBITDA ratio of 3 or less, meaning it would take them 3 years, nothing else changes of their EBITDA to pay off their debt. So their debt situation, I would argue, doesn't look too bad. It's manageable. Now, the next thing that we want to look at is the operating margin. What is their profit from their operations? And as of right now, it is 8.16%. And that was a decrease year over year of 3.8%. And I think it's going to get worse and worse the next quarter, at least for the next 3 quarters, as they just confessed. Now, that might sound terrible, which it is, but as long as it stays above 5%, I think they'll be okay. So even if it keeps dropping to like 8.07% and then down to like 8.01% and then 7.99%, I don't think it's all too bad. When you put it into perspective, that's still a pretty decent operating margin. And the next thing that I want to look at is their shares outstanding situation. Are they diluting the shareholders or are they buying back shares? Now, the good news here is, yes, since 2010, they've been buying back shares aggressively. And as of right now, there is 918 million shares outstanding, which sounds like a lot, but year over year, they've been buying back the shares. Now, the next thing that we want to look at are some technical stuff. And the first of the bunch is going to be their 52-week trading pattern. What has been their highest stock price that they achieved in the past 365 days? Well, friends and family, that's going to be $630. And the lowest price just happened in the past week, and that was $248 a share. You got to be kidding me. At one point, UnitedHealth Group was $248 a share. So they're bouncing around their 52-week low. The next one we're going to do is their 200-day moving average, which is going to be $530.56 a share, which means their current stock price is 42% below the 200-day moving average. That is absolutely diabolical. Now, when we take into account their performance in the stock market, because hey, performance matters. What good is it to invest into something that has a high dividend yield if ultimately your total return you're going to be losing money? Right? Now, in the case of UnitedHealth Group, their compound annual growth rate, when you take into account their stock price appreciation and the dividends paid out, year over year for the past 20 years has been roughly 11.1%. Now, in comparison, the S&P 500, the benchmark, in the exact same time period, was 10.42%. So even though they're going on a massive sell-off, UnitedHealth Group still outperformed the S&P 500. Not by a lot, but they did outperform. Now, this channel is called Dividend Compounders with Cheese. So does it come as a surprise that we're going to be assessing and looking at their dividend profile? I hope you're not surprised. Anyways, for every share of UnitedHealth Group that you own, you get $8.40 a year in dividends, which means their dividend yield is going to be 2.77%, which I would argue is not bad. The minimum standard for me to be a good dividend yield is 3% or higher. But because UnitedHealth Group grows aggressively in their stock price, except 2025, I think it kind of makes up for the fact that their dividend yield is not the highest. And if their dividend growth rate is high as well, I think we can turn a blind eye towards this being a 2.7 rather than a 3%. But knowing UnitedHealth Group is more so for the share price appreciation, not so much for the dividends, I think this is pretty good. But what good is it to have a good and a juicy dividend yield if it's not sustainable, right? And that's why we're going to be looking at the payout ratio. And it is, fortunately, a 35%, which means there's a lot more room for growth. Even if they're going through a lot of headwinds, they should still be able to afford the dividend. Now, what's important to me is the dividend growth rate. And in the past 5 years, they've been growing their dividend at a rate of 11.7%, which is pretty darn good. A double-digit increase I'm a huge fan of. Now, when we think about the payout ratio, it's actually calculated from their earnings per share. So dividing the dividends paid out by the EPS. However, the real ones know that dividends are financed and paid through cash flow coming into the company. And that's why I have the free cash flow per share. We break down how many shares are outstanding with the free cash flow that they post. And as of right now, their free cash flow per share is $26.79, which was an increase of 20% year over year, which tells us that the free cash flow payout ratio for their dividend is going to be 31.35%. So it's a better picture than the traditional calculation of the payout ratio here, at 31%. So a lot more room for growth. And even if they're going to be facing headwinds, their dividend looks pretty darn safe to me. So if you were to ask me on an honest level, I think their financials, metrics, and fundamentals look pretty darn solid. If we were to delete this right here and we were to just put another random company up there, such as Target or even Nike, dude, seeing these numbers, I would be pretty stoked and excited. However, it is UnitedHealth Group that's posting these numbers. And before we go any further, let's talk about their peers and competitors. What you see on your screen right now are the companies in the same line of business as UnitedHealth Group. And now let's talk about their intrinsic valuation. How much should UnitedHealth Group be worth at a per share level based on their numbers and a projected number going forward in the future? Their free cash flow with a 5.5% growth rate, which is really conservative because it's actually closer to like a 10%. But if you were to slash that in half because of all of the headwinds coming their way and say it's a 5% growth rate going forward, then UnitedHealth Group should be valued at $413 a share. As of right now, they're sitting at around like $297, $300 a share. So we can conclude that they're undervalued. But let's go ahead and take it a step further and look at their dividend discount model to figure out how much is this company worth based on their dividend and dividend growth thereof. Now, with a 6.2% growth rate in their dividend payout, whereas historically it's actually 14%. So just so you know, I'm plugging in very safe and conservative numbers. Then UnitedHealth Group should be valued at about $575 a share. So there's a huge disparity between their free cash flow and their dividend valuation. And that's why when I assess companies, I like to average the two to figure out an intrinsic valuation. We could even throw in Benjamin Graham's valuation and the multiples valuation model, but I think these two should be good for now, which means, in my humble opinion, now I'm wrong a lot, but to me, I think UnitedHealth Group, based on these very small numbers to their actual numbers, should be valued at about $494 a share. I hear you. You might be like, dude, that sounds way too high for this company. They're cooked. This is a company headed for $150 a share. Before you say all of that catastrophic thinking words to me, just remember, In the past 365 days, they did hit a price point of $630 a share. So is it crazy and out of this world to say that they have the potential to hit $494 a share based on very modest and safe growth numbers? I don't think so. Because when we compare this number to Wall Street, well, they think that UnitedHealth Group should be valued at about $462 a share. Now, I will say this. In the past 2 weeks, a lot of the analysts have been slashing their price targets and forecasted stock price for UnitedHealth Group. So prior to that, it was sitting at like 560, 575, but now it's 462. So if we were to meet somewhere in the middle and say 475, what is a good price to buy into UnitedHealth Group? If their intrinsic valuation is $475 a share, then I think a good price is going to be $332 a share. And a bargain price to buy into UnitedHealth is going to be $308 a share, which is what they're kind of at right now. And an absolute steal price to pick up shares of UnitedHealth Group despite all of the scandals, litigation risks, and all of the crap that they're dealing with. Anything below $285 a share, I think that's a steal. Which brings me to the final verdict. So when we think about UnitedHealth Group, after doing my homework and research and looking into this company again, because about a year ago I did do a deep dive analysis on them, I think what is happening right now, I personally think this is a market overreaction and the sell-off is just way too extreme. Like someone cutting you off in traffic and you having a road rage fit over it for the next 15 minutes. Just too much. Because I think their business fundamentals and their numbers, even though it might be dropping off by 10% or 15% or missing the mark of the expectations, I still think they look pretty darn good. In fact, this company is probably better than 70% of the businesses that are out there on the stock market. And even if they have a rough 2025 and maybe even a bad 2026, they should still post numbers that are growing year over year. So maybe not at the pace they have been, but still visually up and to the right. Now, am I a fan of the industry and the business itself, on a personal level? Absolutely not. Just thinking about how someone, needing life-saving treatment, getting their claim denied by the insurance company, I'm going to be honest with you, dude, that makes my butthole absolutely itchy. Because when I think about the medical care and hospital treatment landscape, health insurance companies just make the entire process convoluted, more hairy than it needs to be, like my leg hair. But the fact is, the question we need to ask ourselves is, do they print money and is the cash flow beautiful? And the answer to that is yes. It's a really good business, and their operations, minus the fraud that was exposed this year, is what you want to see in an investment, growing at that pace, at that rate, with that scale. So with all of that in mind, I think UnitedHealth Group, if I were to grade them, I think they are a B-. Now, if it weren't for the scandals and all of the setbacks coming their way, I would even argue this is an A- or an A+ type of stock in a business. However, with all of that taken into account, I still think they're above average. So what is it overall? Are they disgusting? Are they decent? Are they delicious? Now, a B- in the US grading system in our schools, that's above average. So I would argue UnitedHealth Group is delicious more so than they are decent. But I do think their brand and image is wrecked in the short term. I think a lot of people have a negative opinion about this company. But with most things in life, I think with due time, most people are going to forget and forgive UnitedHealth Group for their sins. That's just what I think. And you can call me short or ugly, but I think this whole situation, it kind of reminds me of 3M a handful of years ago when they were going through a lot of litigation and court cases, and there was a lot of trouble in their water. Literally, they were pouring out forever plastic particles into the water systems, to the point where in 2023, they were trading at a valuation that just made no sense for how much money they were generating. They were undervalued beyond belief. And even as an amateur in the stock market, even I knew that it was a good opportunity. So I ended up buying a ton of 3M, and it took about 2 years. But since then, they have rebounded quite nicely. And as you can see on your screen right now, I'm up about 100% on my 3M investment, including the dividends. Did I sell out of them? No, I still think they have more room to grow. But would I ever recommend this company? Probably not. Because if you didn't buy in at the end of 2023, I think right now they're trading at a fair valuation. They're no longer undervalued. It's kind of like buying into Meta 2 years ago, which I did, and it did not feel good at the time when I was doing it, because they were trading sideways and everyone was talking about how Facebook, Instagram, and the future of Meta is just absolutely done. However, looking at their numbers, their fundamentals, and their metrics, I knew that Meta was undervalued. And lo and behold, Meta, after Mark Zuckerberg stopped talking about the metaverse and how he's going to burn cash to build out his fantasy, after he stopped doing that, the stock just went 2, 3, 4, 5x'd in a span of like 2 years. So Meta and 3M is what comes to mind as I see what is happening with UnitedHealthGroup. Case in point, with 3M in the past 1 year, disregarding their dividends paid out, just their share price appreciation, they're up by 42%. That's why I'm not selling out of this company. Even back then, I would argue they were a dividend compounder. But to see them just growing and defying the odds, especially as an industrial company, I feel okay with holding on to this company. So when I think about UnitedHealthGroup, I can absolutely see the logic and see why people want to buy UnitedHealthGroup. I think it's pretty high quality, it's a dividend compounder objectively, and as of right now, at the time of making this video, they are undervalued. However, it is one of those businesses and stocks where I would only buy if it's far below its intrinsic valuation in order to bake in a huge margin of safety, because their short-term future, as we learned, it doesn't look too good. It's going to be rough. However, something to keep in mind is that with Doge firing a lot of the government officials and workers, will the government be able to tackle and go after UnitedHealthGroup like they said they would? That's the big question. What if the guy whose job it is to do it has already been fired and they're trying to backfill and teach the new hire how to do things? Anyways, jokes aside, I'm telling you, I'm sleepy, so I'm not as funny. On a personal level, I think the whole idea of health providers getting more money and incentives to diagnose patients with worse conditions than they have, it just rubs me the wrong way. I really don't like what they're doing and the fraud that they're committing. However, that's the business aspect. And as such, UnitedHealthGroup is definitely the type of business where I have to separate my feelings with logic and facts. Because deep down, I think the healthcare system in the US needs a do-over, a restart. But the facts are UnitedHealthGroup and what they're doing and achieving, they're a remarkable business. Now, do I like them? Once again, the answer is no. But is it a good business objectively? The answer is yes. I mean, even with their stock price dropping by 30 or 40% in a span of like 2 to 3 weeks, their total return, taking into account the dividends paid out plus their share price appreciation for the past 20 years, is 684%. And remember, in the exact same time period, their 20-year CAGR, the compound annual growth rate, 11.1%, and the S&P 500 is 10.4%. Now, if we were to go into a time machine together, butt naked like a sauna, and looking at each other's ding-dongs and comparing who's bigger and who's smaller, mine is definitely smaller. But if we were to go back in time, like 2 months, then I would argue this number would be like something like, like 1,200%, and their CAGR would be a lot more impressive. But the facts are, in the past 2 to 3 weeks, they are going on a massive sell-off, and at this point, I don't even know if they have a line of support. They're just defying all the odds, and they're going on a sell-off day after day, week after week. So we saw them hit 248, but I don't think it's out of the question for them to go even lower. Yes, I think that it is a real possibility for UnitedHealth to hit like 220 or even like 210 a share. Can they hit 180? To me, I feel like that's unlikely, but it is in the realm of all possibilities with the tariff wars and what has been happening so far in 2025. I feel like the stock market's behavior this year has been really unusual, especially in my experience for the past 7 years investing. I just feel like 2025 is a weird year. So with all of that said, what is my game plan? So what I am about to say to you, it might surprise some of you guys because despite them being undervalued, I am not going to buy into UnitedHealth Group at its current price of about $300 a share. But I'm not just going to leave you with that. Instead, I am currently doubling down and buying my food stocks like PepsiCo, Flowers Foods, and General Mills. And that's because they are also undervalued, just like UnitedHealth Group, but their dividend profiles are juicier with a lot less headwinds. They're just going on an industry sell-off. And I think in the next 10 to 20 years, they're going to outperform the S&P 500 once they have their rebound rally. I will say this though. If UnitedHealth Group does in fact reach about $250 a share again, then knowing what I know now after making this video and taking the time to learn the company, I don't think I'm going to be able to resist. If they do in fact hit 250, I might open a position in UnitedHealth Group. Which is weird for me to say because for the most part, I'm not too interested in health insurance companies, especially given the hostile environment. There's nothing going their way. In 2022 or even 2023, yes, this company and other health insurance stocks, they were at the top of my watch list. And yes, I even bought into and sold CVS. So it is in my DNA to buy into health insurance companies, but right now, when I think about it, consumers, government officials, and even your neighbor, do we all hate the health insurance companies and their business model? So is it weird for me to predict and feel as if change is going to be coming to the industry? And when I say change, I'm saying change that's not going to be beneficial for UnitedHealth Group. However, given the right price, I think in the long run, just like as they have in the past 20, 30, 40 years, they're going to overcome and do fine. So I think in the long run, UnitedHealth Group should be a solid investment. So if it hits $250 a share, I might join the ranks and we might be in this together. If you are interested in buying into this company, which if you are, please do your own due diligence and research. Don't take my word for it. None of this is financial advice, okay? Now, with that said, before I close out the video, the next video that I'm going to be uploading is going to be a deep dive and an analysis into Target. This is a company that I bought into and sold when they hit about $140 a share for about a 30% profit. Now, when I sold out of them, I had no idea that the company was going to go on this massive dip that we're seeing in the past 2, 3, 4 months. It's absolutely bonkers. If you're not already, that's my call to action. You should subscribe to this channel because when I upload that video, you can be gently reminded that that video is up and live. Now, in the meantime, I should probably go and catch up on my sleep. However, before I go, I just want to say this. Dude, we just won the Europa League. If you are a follower of the channel, then you know that I am a Tottenham fan. And it's been an absolutely rough season. And unlike bandwagon fans, dude, I've been supporting them through the thick and thin, through the ups and the downs. And for this year, it's been a lot of downs. However, we just beat Manchester United and we earned a spot in the Champions League and we got the Europa League trophy. So even though I'm sleep deprived, jet lagged, and I feel cranky, dude, I'm just feeling really happy. Anyways, it feels good to be back, and I missed you guys. And with that said, stay safe, good luck in the stock market, and I will talk to you guys really soon. I mean it when I say it. I missed you guys. All right, peace.